Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for December the 22nd, 2017, the last trading day before our Christmas. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live sessions to take a look at the macro to micro, look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. And our hypotheses are our trade plans. We create four main hypotheses. Two are our primary hypotheses, and then we look at two that are our alternatives, which basically are our expansion days. Otherwise, we're looking for a general auction within the average true range to play out. We don't know what the market's going to do, therefore we create these hypotheses, wait for the markets to show us what it's doing on the open, and then we execute the plan that best suits what the market is showing us. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So taking a look at yesterday, our main hypothesis was an open auction in range, a move down towards the naked VPOC, possibly down into the 82, 75, 83 area. Find responsive buyers, rotate us up, and continue the auction up to make new all-time highs, but ultimately, breaking that 98, but coming back and closing in around 94. Again, we had an inside day yesterday with a false breakout. Hypo 1 was clearly in play all day. Then look what we get right here on the break of the prior day. We get a false breakout with a Mr. Sneaky, and this was a FUBAR Mr. Sneaky. You can see that if I had this, I can bring it up on my this is just a picture that I take to show how my levels reacted each day. But this is, it's borderline, but there was a technical gap, and it was a Mr. Sneaky, and the most important thing is it failed to break out and hold, and then you get this nice huge rotation, almost a 10-point rotation down into the close, and we come back into the upper part of this distribution from Wednesday. So didn't get the continuation. You can see here, I just want to show this to you, that we had our consolidation, then we get our breakout day, and then we come up, and the first day, okay, we come up, we have a tight inside day. 94.50 is our VPOC for the day. Then the second day, okay, the sellers kept on, we opened up, the buyers could not hold the 94.50, and they sold off. And then the third day, we opened and the sellers took control at the 94.50. And then again, yesterday, that the 94.50 was, again met with some selling. Now, what's interesting is to take it the other way and to watch what happens to the value. We had 3 down days. Okay, so if I take this and I move this the other way, you can see that value for the next, for the last 3 days is down at 87.50. Then I take, just the last 2 days. Come on. You can see, okay, sorry, let me do this way. You can see that it's 87.50. value drops to 90.50. Then it comes down to the 85.50 and it holds. And now the 3-day is here at the 87.50 area, 88 area. So, pay attention to these levels right here. The buyers the last 2 days, okay, the sellers were taking control at 94.50. Then they were coming down and they're being met with buyers down here at the 85.25. And then yesterday, okay, that is increasing, and now they're holding at the 87.75. So even though our 4-day microcomposite value for the 4 days is still above us, we want to pay attention to where those buyers are stepping in to hold us. And you can see that it was coming down, but 88 is becoming a very important level. And look at where we're trading right now. Our key line in the sand now becomes the low, okay, or that 85 area between 85.50 and 86.50 becomes extremely important for us today, coming into the end of the week and into this rally. I know it's not what I normally talk about, but I want to just show you, a way of using micro composites that allow you to see where the real action is, not just, okay, the microcomposite is up here at 94.50, therefore 94.50 is our most important price. It is a very important price, but that 87 to 88 area becomes the over underline, and then the 85.50 area becomes the key line in the sand. And that's basically how I'm determining. You can't have just a whole bunch of different profiles, but if you look at the context of those levels and how they shift from day to day, you've got 3 down days, but so that 94.50 is paramount. We need to get above that and hold, which we're failing to do the last 3 days. But you're also seeing where the buyers are stepping in, okay, to try to hold that value, even though value is still above. So it creates this range of probable range on the day that shows you that there's no clear, okay, delineation of price acceptance, but we're seeing where those buyers are stepping in, and that place is rising, okay, the last couple days. And if we can't hold that 88 and they go down to that 85 area and that doesn't hold, then that gives us real good context to understand that they've run out of buyers, and now they're going to have to they're going to have to auction the price lower, and it's likely going to go back down into that 77 to 75, 74 area. The 50% of the significant breakout candles down at 74.50. So just just basically want to give you a context of how I'm looking at price acceptance and rejection in terms of how it's shifting from day to day, not just focusing on, okay, our microcomposite is 94.50, therefore value is still above us and we need to we need to get back up there. It's important, but those other levels are also going to be important. So let's take a step back, take a look at our news. We just did have a lot of news that came out at 8:30. We had core durable goods was a miss. We were expecting 0.5. We came out at minus 0.1, although, and it is from the prior time we're at 1.3, so it was a big miss. And that's why we're seeing some weakness here. Durable goods orders was a miss. The personal spending, though, was a beat, a big beat. Expected at 0.5, came out at 0.6, and then the GDP in Canada was a big miss as well. Expected at 0.2%, came out at 0.0. News coming up. We've got the Michigan consumer confidence and sentiment and 5-year inflation. But the big one that's coming up is going to be the new home sales, all at 10 o'clock. And then 10:30, we've got this ECRI. It's not really a big news event. 1 o'clock, we've got the rig count. Of course, Trump is leaving today for Mar-a-Lago, and there was a notice put out that it's likely that he's going to sign the tax bill before he leaves. So that could be headline news that we just don't anticipate, that it's not scheduled. That could happen at any time. Taking a look at the macro to micro, I like to just start my day each day looking at a simple candlestick chart. I use a 9 EMA and a 20 SMA. Today you're going to see a couple new lines on this chart. Somebody's asked me to do some evaluation. This is John Pearson's PPT indicators, his fast and slow moving average. I've got them on here simply because I'm looking at them, but what I'm really watching when I'm going from the macro to the micro is I'm looking for slope and separation. As you know, do we have strength of trend on each trend line, where it's being on each time frame, where it's being challenged, and then looking for any type of candlestick or chart patterns. So monthly, still very strong, nowhere even close to challenging the trend. We're still coming up towards that upper line of the upward sloping fork that we've been in for 2 years now, and strength is. I mean, we have to get into the lower 2400s before we challenge that trend. Going to the weekly, same thing. Our week open is 83. We're trading, just above it right now. So we have to start looking at where critical mass is. We'll talk about that and mark it on our chart. But trend is still intact, although we do have a technical gap against the 9 EMA. Going to the daily. The daily is showing a possible bull flag. We're still above the 9. We do have this technical gap, so we could still come down into this 77.50 area to the 74.50 area if we don't hold that 85. But for most intents and purposes, the trend is still very strong. We don't even test the trend until we get down into those 77s. Going to the intraday, the 4-hour, okay, a little bit of a different story. We had that 26.98. This is a very weak high, but you can see that we're trying to hold the 9 and the 20 right now, and we're having trouble. And if we get below it, then we're likely to come down and test lower. And we still have a naked cross down here at the 67, 68 level if we can't hold on the 4-hour. Going to the 30-minute, you can see that downward trend from the 4-hour is starting to accelerate to the downside. We're below the 9 and the 20, and we're seeing the possibility of a start of a downward trend. Do I think that we're rolling over? It's still, Santa Claus rally. We're simply pulling back because we're running out of buyers. And part of that process is the fact that, a lot of traders have already taken off for the holidays. So you're gonna run out of inventory because there's less people in the market right now. Going to the 5-minute. Again, you can see that downward trend is starting to accelerate. They tried to take it back on the news, and they failed, and they're right back below the 9 and the 20, and we're getting possibility of a downside continuation. And there is, no, it's already been closed. I thought there was another naked cross down here, but it just came back down and tested it again. So As you know, I don't have to go through the structure because I basically went through the structure. So the key levels to pay attention to, of course, are the 94.50, the 87.50, and the 85.50. You could use the 84.75, the low from yesterday. That's fine. But the overnight low is 86.50. So we basically had an inside session in the Globex. So if we take a look at the Globex, let's just expand this out. Inventory overnight is basically, 95% net long. We did dip down into that 86, which basically was the closing, the closing swing low on the close yesterday. We've come down, tested again, and we're trading, inside this lower distribution from yesterday, and right now trying to hold that 87 to 88 area. So taking a look at our value overnight is above us. So if we start moving our levels over, our overnight low is down at 86.50, which is also our value area low from yesterday. So we're basically trading within the value area overnight. Our value area high is 92.50. Our overnight high is 91.50. So we basically have just been chopping inside of value, in the Globex session. 91.50. Our overnight VPOC is above us at 90.75. It's not likely to change. It might shift here at 89.75 if we get up there, but not likely to shift. And then there is this LVN at 89, which is also the midpoint from overnight, and it's also the open from yesterday at 89.25 and the LVN. So that is going to become a trade area. I'm actually going to use no, I'm going to use the open 89.25 because we're likely, if we get above it, to pop up into the Globex VPOC up here. And then we've got that 92.50, which is our value. This is a valid value area in a double distribution day. And then our overnight low. Our over underline, I'm going to use the 87.50. Because it is also the close. And then our key line in the sand for me is going to be I'm going to use the 84.75. I'll be watching the 86.50 to 85.50, but if I'm going to have a key line in the sand, I want a clear break outside of yesterday. So this becomes my key line in the sand. Because if they break out of the range from yesterday, we're below those key levels, and I've got a clear shot into the 83 and the gap close that we missed down here at 81.75, with the next big target down here between 77.50 and the 74.50. Our 20-period daily ATR is running at 20.14, so off of the overnight high of 91.50 minus the 2014 is 71.50. So this rises slightly. And then off of the overnight low of 26.86, 26.86. I hope Santa brings me a new calculator. 26.86.50 plus 2014 is 27.06.50. All right, and then we have those two zipper measured moves up here. Our weekly ATR does not change. It's still up at the 27.15 1/4. Our weekly critical mass, our open of the week is 83. So 2683 plus the 2014 takes us up to 2703 1/4. And that's our weekly critical mass. To the upside. And to the downside, 2683 minus 2014, 2662.75. And that's near the weekly ATR down. Not likely to see this here. We'd have to have a very strong liquidation break and get into a trend day, because we'd have to get below the daily ATR. And I just don't think we have the participants to do that. 96 becomes a breakout as well. So those are our levels. What can we do with them? Well, we're currently trading right in balance from yesterday at the 88.50. Our inventory is 100% net positive, well, 95% net positive. So we could see some balancing. So I'm looking for an open auction in range. I'm looking for a move down towards the value area low, and somewhere between the 87 and the 84.75. I'm looking for responsive buyers to step in, rotate us up into the overnight VPOC up at the 90.50, chop inside of the 92 at 92.50 and 90.50, and then break higher and push up and take out that 98 all-time high, the week high, and push up into the 2700. That is my primary hypothesis. I still expect not to hold the 2700s today if we get there, or just get a false breakout and break above 98. I'm expecting to close around 94.50 in our primary hypothesis. Secondary hypothesis is an open auction in range, a push up into the 92, and somewhere between 92 and 94, failed to take out the high from yesterday, rotate us down into the 87, back into the overnight low, and this 88 area, failed to hold that, pushed through to the 84, and somewhere between the 84.75 and the 81.25, find the buyers and bring us back up and close somewhere between 88 and 94.50. That is hypo 2. Hypo 3 is a open test drive, a failure to break below or have a false breakout of the value area, take a trip through value up into the 92, chop here, and then buyers take control, rip us up above yesterday's range high at 96, break the new all-time high, go sideways, and then get a late day probe up into the 2706 to 2710 area, and then go sideways, and then start to drift back towards the 2700 in hypo 3. And then hypo 4 is a failure to take out the value area to the high side. Sellers take control early, push us down into the week open between the 84.75 and 83. We go sideways and then fail and push through down towards the 74.50 to 71.50 and go sideways and then close somewhere around 77. Those are my four main hypotheses. The fifth alternative hypothesis is a completely inside day, and we just chop and test both sides of the distribution. So basically having a 6 to 7 point range and basically just chop between the 94.50 and the 87.50 and just go sideways. Taking a look at gold. Gold is broken above that 71 level. We're in this price discovery still, and we've accepted value higher in around that 69, broken the 70 to 70, 71 level, and now pushing through to that magnet. We're getting the continuation pattern, and I'm expecting a move up into this 1280 area, in the next couple days into the end of the year. And then we'll see whether or not they get rejection here, we get the move down, or we get consolidation again and start another leg up and push up into the 1300s. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.